As things continue to fall apart in the financial world, one of the investors that has been sharing indispensable advice is the 98-year-old businessman and renowned billionaire, Charlie Munger, on the only 7 rules he thinks anyone needs to navigate the current financial turmoil in the market. But first, subscribe to Market Magnets and click the notification bell to not miss any of our following videos. Charlie Munger is one of the greats in finance and investment. He has worked with Warren Buffett for over 40 years and is worth over $2 billion, according to Forbes. As Buffett's closest business partner and trusted advisor for over 4 decades, Munger has been instrumental in the growth of Berkshire into the giant diversified holding company with a market capitalization of over $700 billion as of February 2022, and subsidiaries operating in several industries such as freight rail transportation, energy generation and distribution, manufacturing, insurance, and retail. He dropped out of the University of Michigan in 1943 to serve in the U.S. Army Air Corps, where he was trained as a meteorologist. Although he never earned an undergraduate degree, he graduated magna cum laude from Harvard Law School with a JD in 1948. Charlie Munger had always had ties with the Buffetts since he was born in Omaha in 1924. Even as a teenager, Munger worked at Buffett & Son, a grocery store owned by Warren Buffett's grandfather. On Buffett's advice, Munger gave up on the practice of law in the 1960s to concentrate on managing investments. Prior to joining Berkshire, Munger ran his own investment firm, which generated compound annual returns of 19.8% between 1962 and 1975, far better than the 5% annual appreciation rate for the Dow during that time frame. By 1965, Warren Buffett had taken control of Berkshire Hathaway as chair and CEO. 13 years later, in 1978, Munger became vice chair of the company. However, Warren Buffett wrote a letter to his shareholders in 1989. In the letter, Buffett credited Munger with the warnings on the fact that Berkshire should not pursue the cigar butt version of value investing. It's an apt metaphor used to describe investors who buy a dying business. Let's say it is currently worth $1, but it will be bought for 75 cents just to get what Munger would call the 25 cents of free puff that is left in the business. In a few words, the Berkshire version of value investing became phenomenally successful by following Munger's mantra. Forget what you know about buying fair businesses at wonderful prices. Instead, buy wonderful businesses at fair prices. That is the first Munger rule of investing. A great business at a fair price is superior to a fair business at a great price. Sometimes buying an undervalued stock can make you a nice profit. However, in the long run, it's probably better for you to agree to buy a great business at a fair price. The rest is a matter of patience. After all, Berkshire Hathaway was built steadily over the decades by the business acumen of the 2 greatest minds in the world of finance. You will need to be able to hold your position over the long term to take advantage of the superiority of the business you have invested in. The core driver of their spectacularly successful business partnership has been that Munger and Buffett are completely aligned on maintaining industry-leading standards for ethical business practices. Munger has often stated that high ethical standards are integral to his philosophy and to his success. One of his most frequently quoted maxims is, "Good businesses are ethical businesses. A business model that relies on trickery is doomed to fail." This is why an investor must realize that numbers don't tell the whole story. Before investing, some people spend a lot of time studying the numbers and forget to spend enough time asking the right questions. By studying a whole bunch of numbers, these investors forget to spend time thinking. For Charlie Munger, giving too much importance to numbers is a mistake, he says. People calculate too much and think too little. Numbers matter, of course. However, they don't mean everything. Taking the time to understand the qualitative aspects of a business is often even more important. Charlie Munger thinks here about the culture of a company, its management, or its vision for the future. By taking time to think about these parameters, you will have a decisive advantage over investors who focus only on quantitative data. But it is very easy to fall into the trap of favoring information that confirms your preconceived ideas or biases, thereby giving less weight to other important information that works against your ideas. That's why Charlie Munger warns against confirmation bias. He states that an investor should not be reluctant to change their mind if necessary. For the billionaire, far too many investors have fallen for this terrible error in judgment. They don't research enough for contradictory information to challenge their certainties. This unfortunate oversight plunges the impulsive investor headfirst into the ditch of bankruptcy. According to Charlie Munger, falling into this confirmation bias can play tricks on you. Before you invest, you have to go beyond your certainties. He adds that this will help you limit your risks. While limiting your risks, Munger adds another rule. Always remember to apply the KISS principle. This acronym has very little to do with your lips. Rather, it is an acronym for the saying, "Keep it simple, stupid." The investment world can be complex. When you arrive in this new world, you see a lot of new concepts and terms that you don't know. Many investors then make the mistake of spreading themselves too thin by trying just about everything possible. That's a costly move. These investors waste a lot of money and, worse still, time, losing opportunities. Charlie Munger agrees with Warren Buffett that the best way to make a fortune in the stock market is to follow a simple strategy. No need to look for complex strategies. For Charlie Munger, in the majority of cases, the best investment opportunities are in businesses that are easy to understand.
I can't think of a single example in my whole life where keeping it simple has worked against us. We've made mistakes, but they weren't because we kept it simple.
Applying the KISS principle is one of the guarantees of success that Charlie Munger definitely recommends. You should keep things simple. You should also know your limits. Many investors make the mistake of buying shares in companies whose business they do not understand. This often leads them to lose money. There is a proverb that totally sums up Charlie Munger's thinking in this area. In life, it is your ignorance that costs you money. According to Charlie Munger, there is no need to try to be brilliant. You just have to be aware of your limits. This will reduce your risk by a wide margin. And indeed, you will know how to be reasonable and not invest in areas you do not understand. That means you must learn as much as possible so you don't miss out on golden opportunities for the biggest returns. And this way, you will constantly seek to be less ignorant. As you strive to be less ignorant, also be patient most of the time and aggressive when necessary. As we have mentioned, Charlie Munger has been Warren Buffett's right-hand man for more than 40 years. In fact, since 1978. Like Warren Buffett, Charlie Munger believes that patience is the key to making a lot of money in the stock market. Warren Buffett would say that the impatience of some who want to get rich very quickly is precisely what prevents them from succeeding. Charlie Munger also recommends being patient 99% of the time until the time to act comes along. Then, the investor seizes it with both hands. When the right time comes, you need to be aggressive to seize the opportunities you've been waiting for. Ride the perfect storm when preparation meets opportunity. According to Charlie Munger, becoming rich with your investments can only happen if you make a huge bet on your best ideas. The investor must be willing to take the risk. You must use the time you have to wait to prepare yourself to make the best possible decisions in the tiny 1% of the time you will take action. Charlie Munger has always been an avid reader of great thinkers and clear communicators like Ben Franklin and Samuel Johnson. That is why this is part of the rules. Or as they say, readers are leaders. Munger introduced the concept of, quote, elementary worldly wisdom, end of quote, in the business and financial sector in multiple speeches, and also in his book, Poor Charlie's Almanac. Warren Buffett is also no slacker in this category. He recommends reading 500 pages a day. In our day, there are other means of consuming information. Are you a fan of audiobooks? Animated sketches? They both say, go for it. It's the best way to make the wonder of compound interest work in your life. This way, you will be able to get better as the days become weeks and months and even years. If you manage to pull this off, have the patience and perseverance to apply this rule daily for as long as Charlie Munger has, not even the sky's the limit. Charlie Munger advocates for reading books and articles since useful information will help you move upward. That means you have one job: constantly improve your knowledge. Charlie Munger specifies that to become a better investor, you must have complete knowledge in all areas. He therefore recommends reading books on investment, of course, but not restricted to that. Don't hesitate to read other books that will help you better understand topics that may come in handy when deciding whether or not to invest in a business. Which of the 7 tips will you start with today?